After a negative start on the first week of 2024, the S&P 500 resumed its upward move with a positive week. And 2 weeks into the month, January is positive. The Nasdaq 100 also back in the positive territory after 2 weeks into the new year. And the Dow Jones Industrial made another new all-time high last week. The Russell 2000 continues to pull back, and the VIX been under the 15 level for 8 weeks now. And the 10-year yield is back below 4% once again. Welcome to another weekly S&P 500 and financial market analysis. The market resumed its upward move after a negative first week of the year. And once again, the market was pretty much dominated by the few mega cap FANG stock or the Magnificent Seven. You notice that the Russell 2000 and the Dow Jones Transportation were the two index that finished the week negative, with the Dow Jones Transportation down 0.25%. And the Russell 2000 is pretty much break even. It's down only 0.01%. And for the month of January, we see that the S&P 500 and the Nasdaq 100 are the only two indexes that are in the green. The Nasdaq 100 is up 0.04%, and essentially it recouped the first week of losses, and the S&P 500 is up 0.29%. And the Russell 2000 is the worst performer for the month to date, with a loss of 3.75%. While the VIX remain in the low teen level, the put-call ratio stay inside of the hedge zone, so the market participants are still cautious. Although the S&P 500 ended the week positive, but the up-down volume ratio was negative for the entire week, and also the daily advance decline was more negative than positive. The new high, new low is pretty much flat. We are seeing a bit of negative divergence between the S&P 500 and the AD line, so the market looks kind of weak internally. And the Nasdaq was under selling pressure throughout the week, although the Nasdaq 100 finished the week positive. And the new high, new low is also pretty much flat, just like the New York Stock Exchange. And once again, the internal weakness is apparent from the AD line. Majority of the stock were declining in price, while the few mega cap FANG stock was driving the Nasdaq 100 higher. And looking at the 11th sector of the S&P 500, the tech got a little bit of a snapback last week, and it is showing a little bit of an outperformance. The healthcare dipped a bit and showed a little bit underperformance. The consumer discretionary underperformed, and the financial also underperformed last week. Communication saw a little bit of an outperformance last week, and the industrial showing underperformance. Consumer staples still underperform. Energy underperforms. Real estate also showing a little bit of underperformance. Material underperform, and the utility is underperformed. And looking at other sectors, the semiconductor is outperformed, while the oil is underperformed, and also the oil exploration is underperformed. Also, the retail showing a little bit underperformance last week, and the biotech showing underperform, as well as the mining. And the bank and also the regional bank, they both were showing a little bit of underperformance last week. Now, the home builder is showing a little bit of outperformance last week, while the long-term bond is showing underperformance. And looking at the yield curve between the 10 and the 2-year, it continues to move up, and right now it's sitting at minus 20 basis point. But the 10-year and the 3-month is still moving down. It is down at minus 1.433. And the 10-year yield is back under 4%, sitting at 3.949. While the dollar is still holding this 102.50 area, it appeared that the CPI and the PPI from last week didn't affect the dollar much at all. And the dollar future is still trying to move up to this 102.50 and see would it be able to get back up above this composite point of control at 103.995 or essentially 104 level, or would it come back down to test this 100.40 area. Now, oil got rejected once again when it's trying to get above this 75 level, so it's still having a tough time to try to get above this composite point of control near 75.69. And silver is trying to hold this 22.40 level. It came down and finished the week with a little bit of a doji hammer type of a candle. So we'll see in the coming week, will silver be able to make a push back up to this composite point of control, or come back down and do a little bit of back test near this 2240. And gold is still trying to break out from this balance area and move beyond this 2090 level. Now let's take a look at the indexes, starting with the NASDAQ 100. It is still near this all-time high here. It's all-time high. Try to break above this 17,000 level. Now I do have a bull flag here, and the bull flag major move could project a potential target up at this 18,300 area. And the Russell 2000 is still trying to hold on to this 1925 level. So look for it to make a move either to come up to this 2028 level or break below the 1925 level and come down to possibly test this 1830 level. We're still watching the Dow Jones Transportation to see would it be pulling back and possibly test this 15,000 level. And the Dow Jones Industrial make another new all-time high last week, like I said earlier, and continue to watch for a move up to this 38,000 level or pull back and test this all-time high, this old all-time high here. So we're basically just watching the round number up for the Dow Jones Industrial on the upside. And the New York Stock Exchange Composite is still flirting with this 17,000 level. So if Dow Jones Industrial could close with a new all-time closing high next week, then most likely we will see the New York Stock Exchange come up and get above the 17,000. And for the S&P 500, the S&P 500 is getting closer to its all-time high. I do have a symmetry move here that the major move project up to somewhere near the 4,900 level, but do not overlook the possible pullback to this pivot high here and this 4,600 area. Now, last week, the price moved above the upper range of the expected move. And this week, the market is pricing in a move to a new all-time high. And the upper range is between 4838.33 and 4830.90. And the lower range is between 4736.70 and 4715. But keep an eye on this 4637 area, this zone here for a near-term pullback. And looking at the ES, the E mini S&P 500 on this market profile, you can see there is still this poor high here and also a poor low. Within this balance area, we're seeing this multi-week balance area. So I'm looking for this thing to possibly either break above or come back down to the lower edge. Notice that it went from a one-time framing down from previous week to one-time framing up last week. So here's what we're basically looking for is to see would it come up and take out this high. Then would we actually see a look above and fail and then come back in and we trace back down to this 4760 area and possibly break below that and come down and clean off some of these poor structure here that left from December. And here's the volume profile of the ES. We're still monitoring these distribution area here, and most likely these distribution area will get revisited in the near term. Now the question is, will the price actually break out of this balance area and come up to the upper range of the monthly expected move, or will it come down and test this lower range of this balance area before make another move up and break into a all-time high? Now let's take a look at the index ETF. So starting with the Dow Jones Industrial, the diamond. So for the coming week, it's pretty much the same. It's been consolidating up here near the all-time high here. So the downside expectation is for it to come down to test the liquidation low somewhere around to 370.61. And the coming week, the upper range is between 380.30 and 379.50. And the lower range is between 372.30 and 370.80. And the SPY finished above the upper range last week, and it got close to the all-time high near this 479.98. And for the coming week, the upper range is between 482 and 481.50, and the lower range is between 471.80 and 469.70. So we'll be watching for the all-time high here or the pivot low down here for a possible retest. So just beware of the potential 1x major move up here near the 488. This could be the symmetry move between this swing or this bull flag. So whatever you want to call it, the result is the same. The major move is up here at this 488. And the Q closed above the upper range and is getting back near the all-time high level. In this coming week, the market is pricing in an upside move to the 127 extension up here near the 414, 415 area. The upper range for the week is between 416.50 and 415.30. And the lower range is between 403.80 and 401.80. So look for another all-time high if it could stay above this lower range. The IWM continued to pull back, and the market is pricing in a possible move below this 189 level here. The lower range for this week is between 189.40 and 188.40, and the upper range is between 198 and 197.10. So in summary, we could see the S&P 500 make a new high this week before a pullback. Now, while the VIX is still under 15, it will not surprise me to see a spike in the VIX soon, as many of the FANG stock is coming up to the potential resistance level. Now, the market participants are not totally risk on because the put call ratio is still in the hedge zone between 0.75 and 1.0, even though the VIX is below the 15 level, showing that the market participants are complacent, but they are still pretty much cautious. And if you'd like to see my analysis of the Magnificent Seven or the FANG stock, go to my Substack page at smtraderca.substack.com. And be sure to smash the thumbs up and subscribe to the channel. Thank you for watching and good luck.